Thanks, Sangram. Our next session is called Connect and Grow, and this session sort of captures. Like today, we live in a very interconnected world, and in this session, Subrat, he's the head of sort of looks into the head of operations, head of IT, strategy, and BIU. So you would have seen Subrat answering some of the questions in the earlier session. He's going to be there. Then Sanjeev Moge, who heads our cards and payments, and obviously Vivek Gupta is, heads our wholesale banking products, and also Munish, the Bharat banking head, would also come in. So how we are sort of capturing the urban journey and how we are capturing the rural and semi-urban journey and how we are interconnecting and connecting these dots to sort of ensure that we keep on adding these sort of drivers to this growth engine is what we'll see in this session. I'll hand over to Subrat.
Good afternoon, everyone. There's a motley crew of people who will come and talk about this particular initiative, which we call Connect and Grow. In some ways and forms, and I think there was a question in the morning about what we are doing on ecosystems and partnerships. And there's always been this conversation that in financial services, and it's not of recent past, I think it's been around for last 5-6 years, that we should have more ecosystems and partnership plays within a bank. But there are always these, very fundamental questions about success of what good ecosystem or partnership play means. I think one important metric of success is it should go beyond one partnership. Are you able to have multiple partnerships which are at different stages of evolution? And are you actually able to go beyond just a bilateral kind of a relationship? Second is this idea of embedded finance, that can you put in a product, can you put in a particular feature or a service within a particular ecosystem. But barring a use case or two that works and stays in a pilot stage, are you actually able to ramp this, scale this, that it actually makes a meaningful impact in your core business? These are some of the questions that we try and address, where we believe that we now have not one or two, but possibly more than 10 instances where we are actually checking the box on what true ecosystem or true partnership play means. And that's really one of the things that we want to do as part of this session. So Munish, Vivek and Sanjeev will come in and give instances of how that is working. Before that, what I'll do is help all of you with how our thinking is evolving in this space. And in some sense, what is the fundamental plumbing that we are doing in order to make this come through. In the morning, what you've seen with technology, with BIU, with business intelligence, is what I call the hardware of this particular exercise, which is making the bank more API driven, making sure that in some ways we are turning the bank inside out and exposing in some sense, the ducts, the faucets of the bank out for the partners to participate in. Which I think is a difficult task, but it's largely manageable. We've been able to do it over the last 2 years. One of the other things that really matters here is not just the hardware part of it, but just how the bank operates in being able to manage these partners, which is, does your risk policy start getting aligned? Do you have the right InfoSec policies that are able to actually, get synced up with your partners? Because many of these partners are slightly outside the regulatory domain. Some of them sometimes act which might be considered beyond the pale. You have to make sure that they come in and they start acting in conjunction with everything that is actually getting monitored by you or in a way governed by you. So there is a certain, what I call the softer element of integration. Do you have a team that is able to go after partnerships and ecosystems in a very deliberate manner? So as we saw through this ecosystem, we realized a few things are happening, which is why we are doubling down on this, which is why it's a separate theme for the bank. First, there is this whole business of public infrastructure being built by the government. It happened in payments. You can argue that banks missed out on that infrastructure. Others came in and made the investments and took away a large part of that, that particular pie. As we see now, there is a public rail being built for e-commerce through the ONDC platform. There is a public rail being built for lending through the OCEN, GSTN, all of these things getting integrated. We see a public rail possibly being built through account aggregators, even for liabilities and third-party investment products. And therefore, doubling down on this, because there is a public infrastructure which is taking care of some of the more fundamental plumbing problems, is something that we have accepted. We don't want to miss the bus on this time as a bank. Second, where there is no public infrastructure being built, we are building the protocols. And that you'll see how Vivek or Sanjeev will help you appreciate how we are building some of these protocols, so that if there is no public infrastructure, we can be the aggregator for a whole lot of partners. The third is, we also believe in some ways the regulatory stance on some of these things have changed in our favor. Regulators have moved in ways, at least definitely in cards and some of the payment areas, where many of the folks who are coming in to disrupt are now wanting to partner, because they have realized that if they want to go deep into this space, the regulator will come and start asking them to behave like a regulated entity. So all of this put together, we believe there are large customer pools available. Regulatory stance is supporting us, and we have built both the hardware as well as the softer plumbing in order to take this particular opportunity forward. And what that has meant is, across various opportunities in the marketplace, and this goes beyond banking in a very conventional sort of, if you were to look at it beyond the conventional thinking of a bank, we see it happening across the board in various ways and forms, whether it's Bharat, wholesale, digital, MSME, customer experience, and things of that kind. We've picked up 3 today to give you a flavor of how this is working. But when you look at this list, all of these are in some sense checking the box, both in terms of the scope and our ambition and the level of integration that is happening with these partners. So I'll start off with the most sort of celebrated case at this point of time, at least within the bank, which is our partnership with Flipkart. But again, I will suggest you look at it from the lens of how deep and wide the partnership is, which goes beyond just the hardware part or the hardware elements of the partnership. But more importantly, how this is not just one partnership, that there are already 3, maybe 4 other, partners that will possibly follow the same trajectory of connect and grow, even within the card space. So with that, I'll have Sanjeev take over the Flipkart story. It'll be followed by Munish on the village level entrepreneur story, and then Vivek, who will take us through the credible journey. And then I'll come back to wrap.
Thank you, Subrat. Good afternoon, everyone. Okay, I already have a mic. Good afternoon. If you would recall, I'm audible, right? Yeah, okay. If you would recall what we presented in the analyst deck 4 years back, was the fact that we are a very large ETB-based acquisition and business, and we pride ourselves on that. Now, we still continue to be very, very dominant in the ETB space. Even today, close to 2/3 of our acquisitions come from ETB, but the change which has happened, and it has happened in a very calibrated manner across each of these years, is the fact that we have diversified into non-banking customers coming in. Important part is the largest chunk of that, now close to 30% of it, is coming from KTB. Now, the models are not very different per se. In ETB, we have certain data sets about the customer, and we know these are the customers we'll go to. Equally, these are the customers we'll not go to. Frankly, it's not any different for KTB. Whether it's a Flipkart customer, whether it's a Airtel customer, so on and so forth, etc., it's a very similar strategy. We know these are the customers we want to go to. We stamp them. They see an offer. These are the customers who are not stamped. They don't see an offer. What it allows us to do is essentially give a very good approval rate which the partner wants, calibrates the risk. Third point, it ensures the cost of acquisition is good because you don't have to flash it to everybody. Now, with the same principles, therefore, the scorecards and all of those aspects were spoken about by Balaji in the morning. What that has done essentially is, for us, now we have a large internal liability-based ETB channel which runs, and we have a very large funnel on the KTB side. What are the drivers for this? To the point Subrat and Amitabh were making in the morning is the fact that this is not built overnight. This takes time. Flipkart got launched in FY20, and since then it's been close to 3 years now. We launched Flipkart in July 19, so it's actually 3 years. There are three important parts as we believe. One is the product has to be clutter breaking. You can't have a Me Too product and say, I want people to flock in and apply for it. So that's one, which is the product part. Second part, you need to be able to create an underwriting model and a marketing model which talks to the partner's requirement, which also means you are able to control the risk and the cost. Last part is you need to have digital capabilities. You can't expect in a very, very old world model, let's say Flipkart, to give me leads and say, now this person is interested in an Axis Bank card, please go and source. It's just not going to work at scale. These are three key drivers. Against each of these key drivers, you can actually see what the success metric is. If the product is good, customer will engage, activation rates will be good, activity rates will be good. If the model works on risk and in terms of digital capabilities, your approval rates, your risks will remain under control. So these are key components. Now the partnership goes beyond just the card's partnership with Flipkart. We were already engaged with them. We continue to be engaged with them in a business which stays with me, which is on the merchant acquiring side. But all of the other components, if you were to see, on corporate banking, on supply chain financing, we work very, very deeply with Flipkart. We believe this model is something we can scale up not only in Flipkart, but across other partnerships as well. In terms of journey, now what we've done over here is screenshots. I don't know if any of you have gone through this journey yourselves, but fact is, this is the banner that you see. We do tactical promotions when there is a BBD or something tactical happening. Let's say there is a sale in May, there's a sale around the Big Billion Day sale, etc. But fact is, only certain customers see this. Flipkart has multiple customers. Everybody doesn't see this. That's basically the marketing model that we have made. The journey is digital. Again, emphasizing the point, this does not come to us as leads. These come to us as either fulfillment to be done or in many cases, card, which is just booked at our backend. All of these are screenshots of the screen. Since last year, we've also been booking cards end-to-end digital, which means not only do we approve you in principle, which we've been doing for the last 3 years, but it flows to the Vision platform, which Samir spoke about, which is video KYC, and then end of it, the card goes for underwriting and booking. So all of it is done digitally, which is the video KYC screens. Now, this is an important slide for us to understand what happens in a certain partnership and how are we able to take it across. To my mind, there are 3-4 key takeaways from this. One is, okay, what we have done over here is actually this 4 stages of a partnership. One is the very initial stage. You get to understand the partner, and obviously you work pretty closely with the partner even before you launch, but you understand much better across functional units in the bank, functional units over there, which is the initial phase. You create the opportunity stack, then you move on to scale, and last point is important, you refine and repeat. Second point is, what level of maturity are your capabilities and the experience of that partnership? So Flipkart itself, when it started, it was nascent for us. This was the first large KTB partnership we were launching. We ourselves were in a nascent stage. But as we have learned from Flipkart, when we launched, for example, let's say Airtel, we were far more experienced. It meant we were able to launch faster. It meant capabilities which came in Flipkart over 12 to 24 months were available in Airtel on day one. So our own experience has moved on. Second point, now Flipkart is in 3rd year of partnership. Yesterday we launched the 2nd version of the card. So there is a super elite card we've launched yesterday. Today the card is based on cashback. This is appealing more to loyalty customers of Flipkart, Flipkart Plus customers. The currency changes from cashback to super coins. Now that is a part of what we are calling the refine and repeat cycle. You don't have to stay with just what works. You will need to keep disrupting yourselves, keep learning and launching new stuff. So which is part of the refine and repeat cycle. Second point, if the first Flipkart underwriting marketing model worked well for us, we rolled out our Flipkart 2.0 model from August. The base, which is now stamped for Flipkart, is a multiple of the earlier base. So essentially, when we are talking refine and repeat, it's the same cycle that we started from July, which got us success till now. First million in 19 months, second million 12 months, third million in 7 months. We can just repeat it all over again for Flipkart. There are learnings which have come from Flipkart, which have gone into Flipkart. Second part, all of those learnings have gone into each of these, Google, Airtel, Samsung. Which is why we are able to shorten the launch cycle, which is why we also believe we will be able to accelerate the scale-up cycle. All of these partnerships taken together, and by the way, there are more in the works. These are ones which are out, which are launched, so we can talk about it. becomes very, very formidable because each of these are now loaded with all capabilities on day one. Whatever cycle we've gone through, each of their bases are equal to slightly lesser, significantly more than Flipkart. This runway is very, very formidable if you put it all together. The last point, right now this is a card story. We are now looking at loading PL, other lending products, and in some of the cases, liabilities also onto these partnerships. That opens up a very different potential for us in terms of the way acquisition engine can move forward for Axis Bank as we move forward. We have a testimonial from our senior contact in Flipkart. I'll just play that video.
Hello everyone, I'm Dheeraj Aneja, Senior Vice President of FinTech and Payments Group at Flipkart. First of all, I would like to thank the Axis Bank team for giving me the opportunity to speak at the Analyst Day being organized by them. Axis Bank has been a strategic partner for Flipkart, and there is significant value that we have mutually added for each other over the last few years through credit and lending, transaction banking, cash management, retail partnerships, and investment advisory services. At Flipkart, we believe access to formal credit is important for a customer to enjoy a convenient and affordable shopping experience. Through our fintech constructs, our endeavor is to make commerce in India more inclusive by democratizing access to formal credit. We took this partnership to the next level on the retail banking side by launching the Flipkart Access co-branded card in 2019. A card that was designed for a wide range of customers who shop on Flipkart and hail from metros like Mumbai to tier 4 cities such as Gangtok and Sujangarh among others. With over 3 million cards issued since its inception, the Flipkart Access Credit Card is one of the most preferred cards amongst our customers, and the value proposition of the card resonates strongly with the ethos of Flipkart to provide value to its customers. Reaching this milestone in a short span of time has been possible because of our partnership with Axis Bank and their commitment to making this partnership a success. On behalf of Flipkart, I would like to take this opportunity to thank Amitabh, Rajiv, Sanjeev, and Vineet and other members of the Axis Bank team for helping us achieve our objectives. We wish Axis Bank the best and look forward to scaling this partnership to newer heights.
Thank you. I'll hand over to Munish for the next section of this.
Hi. So I'll just start by telling you what CSC is, right? So CSC stands for Common Service Centers. It's an endeavor by Government of India, Ministry of Electronics and Information Technology to build a digital pipe for government services into deepest parts of the country. Now, while it does take the services to deepest parts of the country, it also provides services to people, even in the city of Bombay. I was telling somebody at the stall that in Ghatkopar market, there's a CSC VLE who's a teacher, who's a professor. He's now a teacher on Beju, and he has a small shop offering CSC services, VLE services to people who come to his shop for making a voter card, for making an election card, for making a license, for making a passport, etc., stuff like that. So these guys are spread across the country and into deepest parts of the country to use the services that can be funneled through CSC digital pipe, and they give it to the customer. That provides us an opportunity to kind of ride on the same digital pipe, and the customers that are in that person's ecosystem, they come together and we can offer them some solutions. Our approach is, we've been doing it now for about 18 odd months. Our approach is that there's a large number of people out there, and you may have heard Prime Minister talking about CSC multiple times in his speeches, in the last few speeches that he's given. Our approach is to figure out as to what do we do with these VLEs? How do we segment them? What kind of customer segments are they catering to? And what could be the opportunity? And we are, I'm sorry, since this is an initiative which is only 18 months old, we are also kind of learning and growing as we are moving along. And I'll give you a couple of examples. When I was traveling to a very deep market, in Anand, in Gujarat. And I was, I met a CSC VLE there, and and I asked the guy as to what do you do for a living, and he said, I send kids to foreign universities for education, right? So, and how do you do it? You said I have tie-ups with multiple universities across the globe. May not be the prime universities, but I then go and source kids from areas near my village, near my town, etc. And I help them get admission, and then I help them, the parents, go through the process of admission, etc. He's a representative of several universities in that area. Now, it begs a question as to what can you do with this guy? Now, the first thing that comes to my mind, I was with the branch manager of the local branch, the first thing that comes to your mind is that, that you could actually help this guy sell Forex cards to his clients, right? Because as you're going abroad to study, you need Forex products, right? Or you could take an education loan, and lo and behold, from there I went to a rural unbanked branch, again in a very, very small village. Imagine a rural unbanked branch where there's no bank, and I walk into the branch, and the branch manager is talking to a customer for an education loan product, right? So it tells you that, in that ecosystem, education and Forex, etc., is a segment that you could kind of cater to. So then you start figuring out as how do you customize your opportunities for somebody similarly in a mandi, somebody sitting in some village, somebody sitting in a market, somebody sitting in an industrial area, somebody sitting in this kind of segments, etc., etc. If you're able to segment that well, then you can kind of customize your services in a cost-effective manner and get those guys to sell products and I talked about this earlier, is in a multi-product environment. Key is to ensure that since these guys and since we bring one axis to play, even in this network, it's very important for us to ensure that the experience that the customers get, because he is now an Axis Bank representative in these markets, and he is giving my experience to the customer. We have to ensure that we give the right experience. We are within the boundaries on controls and regulations and whatever else, and we train these guys well to be able to effectively pipe the banking services through our network. So we are in a calibrated manner. We are increasing our network. We have now about 54,000 people, and this network is going deeper and deeper and deeper. I was telling some people that today CSC actually is mandated by the government of India to, there's a new, you may have heard about this Bharat Fertilizer thing. So the government is saying that Bharat Fertilizer will be sold under one brand, and it will be sold by a network of dealers or distributors across the country. All of these guys will also become VLEs. And the way today the subsidy gets passed to fertilizer companies by the government is that every single farmer who comes to buy fertilizer from a designated dealer, who's a dealer or distributor of a fertilizer company, they do an Aadhaar validation of that customer. Every farmer has to do an Aadhaar validation, or the buyer has to do an Aadhaar validation for the subsidy at the back end to flow to the fertilizer company. Now, one would think that if you have that data of who's buying fertilizers, at what frequency, and at what price, what range, how much money he's spending, etc., etc. If you could actually start using the data, you could actually start underwriting that customer much better. So you know who you're dealing with, right? So that's the power. That apart from that, these guys are also doing small pilots. And for instance, they have about, if I get the number right, they have about 100 people who now express a desire to become dealers of commercial vehicles. So in deepest geographies, this guy is investing to buy 2 commercial vehicles. He'll take a loan to buy 2 commercial vehicles for display or some sub-dealer, etc. He will get customers to showcase those products, and some dealer will supply, and he will get his commission. So it is giving pipe to multiple other products which talk very well to banking products. I can do a commercial vehicle loan. I can do multiple things. So today we've scaled this up. We have our volumes have scaled up, and this is multi-product. We do commercial vehicles, educational loans, farm finance, farm equipment finance, personal loans, small business banking loans, commercial banking loans, gold loans. All kind of loans get funneled through these fellows, and they get some, commission on the loans that they refer to us on conversions, etc. So that's the model that we are. I would say that we are somewhere now in the middle of the journey. We have to more and more digitize all these outlets, and we have to more and more train these guys, segment them more and more. And we think, sky is the limit, keeping a close eye on the risk that flows through. We watch, for instance, the credit screens don't change. If he's referring a customer, we're not doing it, we're putting it through the same credit screens for all the respective products, the lead as it comes through. So the risk that is there that comes to us from this set of customers passes through the same screens that's there for all other customers. And you monitor the credit quality for frauds, for whatever else, etc., apart from the whole lot of transactions that they could do with the customer, which are cash transaction, AEPS transaction. We are going live on the Aadhaar Pay system just now. We perhaps could be, we're working on Aadhaar Pay, etc. with them. So there are a number of things that could go live. We're working on enabling them to sell credit cards at their touch points, which is a digital journey for selling a credit card through upload of documents or upload of some surrogate income that the customer may have. So we think it's an immense opportunity. This is going to grow. The government is investing in this initiative big time, and we had to just make good use of it. Our volumes this year, in the first 6 months of the year, is nothing to write home about, but it's 2x of what it was in the entire full year. But we think the sky is the limit for if we really were to manage this entire piece very well. And the way we manage it on the ground is that this is a hub and spoke kind of a relationship. All the VLEs in any given catchment are owned by branch managers of that branch. So they connect with those guys. The VLEs come into the branches for some chai pe charcha kind of sessions, etc., and they get trained. And so they're managed by the branches, which gives us an opportunity to kind of ensure that we also help the branches grow. Somebody outside asked me a question, is there any substitutability between a VLE network and a branch? And our view is that there's no substitutability per se, but if the VLE network is effective, the likelihood of success of a branch goes up because we can get more customers to the branch through the VLE network. So that's the broad plot here. It's under development, and we'll continue to build this out. We're selling all products through these channels, and digital tools, more and more digital tools. I talked about it earlier. A multi-product digital tool at the front end. I mean, key for us in Bharat Banking is that once you, and Balaji talked about it also, underwriting every Indian, once you get data of a customer, or once you've done a KYC of a customer, it's important for us to ensure that we make use of the information for underwriting the customer for multiple products. So that's the way forward here, and we will continue to build on this initiative. Thank you.
Hi, good afternoon. Can we move to the next slide, please? Oh, sorry. Good afternoon. My name is Vivek Gupta. Always a difficult one to stand between you and coffee, so I'll try to be quick. Look, I think we have a number of partnerships running on the wholesale banking side. There are 3 key principles that are driving why we're going about getting into these partnerships. Number 1, we definitely want to have a differentiated market proposition, a product proposition or a market proposition. The product market fit is very important. Second, it is very, very critical for us for the proposition to be genuinely market leading, right? And third, having established the first 2, very, very important for us to make sure we scale it up very quickly. So our go-to-market strategy has to be absolutely top class. So here is a good example of where we really want to dominate and grow into the supply chain finance space. We already have a decent market share, but again, the ambitions are much larger. So in this particular instance, I mean, if I can just step back and say, what is supply chain finance? So typically you think of banks, and I think the names mentioned Flipkart or Airtel, it's a bank and the Flipkart, right? But we also have to think around the relationship between Flipkart and Flipkart suppliers and Flipkart Flipkart's sellers, or an industrial company and their distributors, an industrial company and their vendors. So the entire ecosystem, upstream and downstream, is what is called as supply chain finance. And there is a residual, it's a large value on both the vendor side and the distributor side of the business, right? So it's very important for us to help our anchor clients, larger clients, realize that value upstream and downstream. In the process, we benefit. So here is a classic case of what I would say, we connect to one to connect to many. So connect to one anchor to connect to many distributors, connect to one anchor to connect to many distributors. And how do we basically stitch a solution together? Now, fundamentally, to get to be really successful in this space, we need a couple of things. We need to solve for the anchor client, we need to solve for the distributor, we need to solve for the vendor, right? This fundamentally also means that for the anchor, we got to solve for both the visibility of the treasurer upstream for his distributors and the vendors. Thirdly, it would necessarily mean we need to be leveraging technology, we need to be nimble, and we need to have a very, very efficient way to onboard. So look, we had a cold look at this, and we said, look, we have to basically work with the fintech given the go-to-market agenda. And essentially, we said, look, we'll take a fintech proposition, in this case with Credible. We did a fairly detailed evaluation. We liked what we saw. But we didn't actually take the proposition in itself. We actually enhanced the proposition, right? And in addition to that, bringing our own solutioning industry knowledge, we actually created an Axis IP, right? So in summary, what we ended up doing was to say, look, here is a large industrial client, right? The client needs to solve for using its excess cash to finance its vendors or its distributors. The client also needs to solve for where the bank needs to come and provide financing. All of you have heard about the Treads platform. The bank also needs its distributors or vendors to be on the Treads platform, right? And similarly, therefore, we said we'll work with Credible, right? Solve for the client's complex working capital problems, co-create a solution. So on the vendor side of the Credible proposition, which is actually an Axis proposition, what we've ended up doing is we said the entire onboarding of the vendor is digital. The entire documentation that we sign with the vendor is digital. So that allows us to scale up the commercialization of the proposition much, much quicker, right? So those are a few things we've done. Obviously, I think along the way, we realized that given our ambitions and given what we saw with Credible, that it was important for us to also take a strategic stake in the company. So we've invested in that. And we have, therefore, a directional ability to influence outcomes as to their product roadmap, which is also important if we want to scale up in that particular area. Look, I think we are winning. We are winning at scale over the last year. I think the numbers are out there. The key point I want to land with you is the wins are important because these are all new wins. This is new share of wallet, right? This is not left pocket or right pocket. So we are winning at scale where we were not winning earlier, right? And the process has only just started. I'll speak a little later, along with Rajiv in the next session, where we are actually taking this solution in a slightly different way, where we are not constrained to only look at supply chain finance, but we're also stitching together cash management, where we are actually ending up financing the distributors. Likewise, we're looking at how do we stitch payment solutions. We're looking to finance the vendors. So the intent is to actually take the partnership, connect to one to connect to many, and then bring out the product adjacencies on the wholesale banking side. Right? Thank you very much. I'll pass it back to Subrat.
Right, so, just to round this thing up, both this presentation as well as the broader session, we are working hard towards being a partner of choice. We just want to be someone who's the first port of call. In fact, that's what we've told, say, an AWS, that's what we've told some of the fintech partners, was if you have an idea, come first to us, because we will be more than willing to sort of, look at what we can do. And one of the other important things which you have been mentioning since morning, we've now figured out what is the balance between trying out a new thing while protecting data, protecting InfoSec and things of that kind. And it's working now at scale. Now that's again a very sort of an important point. And wherever possible, we will make privileged investments. So it's not just partnership, it's also, like Vivek mentioned, if we think it's very important, we'll make a privileged investment because then we want to be part of the product journey, the product roadmap, because that's important for us as we go forward. So what that means is some of this is starting to happen, this investment thing, this broader partnership thing, and the industry sort of investments. And lastly, more than just all of this, there is an org structure now that is actually supporting this. So under Sanjeev, there is a full partnership team which sort of manages this on a programmatic basis. That is, every single partner, where they are and where we are with them in terms of our journey. So just to wrap this up, see, there are two things we did as part of this session. We talked Connect and Grow, which is, just opening the bank inside out and making partnerships and ecosystems play at scale. And before that, we spoke about the fact that this is going to be our thesis is that it's going to be the MSME decade ahead of us. In a way, both of these sort of play with each other. The MSME decade will require ecosystems and partnerships, especially making sure that we utilize the public rails, the public infrastructure, as well as the private protocols that we are building. That kind of sums this up. We'll take a break. I'm doing your work. Okay, we'll take questions. And then what we'll do in the next session is just go segment-wise into wholesale bank, into retail assets, and into liabilities, and wrap up the session thereafter. But very happy to take questions for this particular session.
Go ahead, Suresh. Yeah.
Hello? Yeah. So I just had a question on cards. When you go for your co-branded cards, how do you assess the profitability? Because what we hear actually is that in certain cases, the co-branded cards are not as profitable as standalone cards because the co-branded partner lands up extracting their pound of flesh. So how exactly you go about looking at the profitability? And is it indeed true that the co-branded cards may be at times lesser profitable than, say, the other card propositions?
Yeah, so are they less profitable? Yes, the answer is yes.
Okay.
But the fact is, the key question is not are they more or less profitable, are they profitable enough? They are profitable enough. Keep in mind, cards runs at a certain profitability. And you give something to the customer, you give something to the partner, even then there is fair amount. We have defined certain hurdles internally. As long as the partnership meets those hurdles, we will go ahead with the partnership. And again, you got to balance your portfolio. Just as you were balancing your portfolio in the earlier world between transactor revolvers were significantly more profitable. Nobody said we should not do transactors, right? So if you put it in those perspectives, it's a balance you have to run the business always with. This is another balance you have to run the portfolio with.
And what about the balance coming from corporate cards? I mean, how do you look at that proposition, value proposition?
See, that we put out 2 years, 3 years back on the street, right? It doesn't make money during good times. During bad times, you may lose money. So we've kind of just managed it at a certain level. And we will continue to stay with what we had put out on the street now close to 3 years back.
Yeah, please go ahead. Yeah.
Hi.
Could you identify yourself, please? Yeah.
This is Yash from Citigroup. So one on the question on the how different, what specific differences are in the underwriting when it comes to underwriting a Bharat customer versus a traditional Axis Bank customer who tends to be more urban in nature, and what are the sort of cost dynamics in there?
Yeah, so the way I refer to that in my talk is that when you look at a Bharat customer, a number of things that come into play, which is you need to look at the transaction data as well. You need to manage some of these customers on flow information, not on the static information, right? Not on income, but on flow, right? So when you start seeing flows and you manage them on the back of those flows, for instance, I'll give you an example, and there are several such examples that will come into play, is that if a customer is selling a sugarcane to a corporate, okay, and he knows that he's a tie-up for selling sugarcane to a corporate, and he has to get money in return. Okay, I know that when the money is likely to come, I'm giving him a credit for a particular period during his cropping season and as well at the harvest. So I'm giving him money, then I underwrite him basis of the money that's going to flow to him from the corporate, right? So not only on his income, of course, within the broad acceptability criteria for underwriting customer, bureau score, etc., all of that, of course, is taken care of. So this is just one part. Similarly, when you underwrite a farmer, for instance, farmers are underwritten very differently. Farmers are on the crop that is being sown, the per acre, how much can you give to the customer, the consumption, etc. That's something that is different. In some cases, you end up doing income estimation for lending to these customers because income is not formal, etc. In some cases, some transaction data with the bank, you're doing some cross-sell for the bank. But Bharat is also, you must realize there are two components of Bharat. One is semi-urban, one is rural. The semi-urban customer is a slightly watered-down version of an urban and a metro customer, but he still has a lot of data. But what we are also realizing is that GST data flowing through, etc., helps us also underwrite a customer for unsecured business loans, for instance. If you have GST data or some other stuff. So various models for various different products that are into play, but it's not very formal as of now. I hope that answers.
And just one more on the entire customer experience, right? When well, there is a lot of talk on being, digital lending even to the Bharat customers, but a lot of lending in the rural side tends to be relationship based. So is the idea to maintain a correct balance between physical and digital, or?
See, there are elements of customer experience when you talk, and the elements of customer experience have to be looked at from two different aspects. One is when you're an asset customer, and when you're a liability customer. Okay, so when a liability customer, so we see 2-3 things that go into play. I covered about internet penetration, people willing to use their system, etc. He can see everything on his screen. So whether you're vernacular or not, for instance. Okay, so building a vernacular communication engine with these customers is a digitally, etc., is an important thing to do. On the other side, on the asset side, the relationship management, engagement, etc., largely it is led by somebody as of now. But there are some products which lend themselves very well to, for instance, if a gold loan, somebody has to come to the branch. I have to value the gold and to underwrite a customer, right? I cannot do anything. But if you are buying a tractor and I have a solution at the tractor shop and I can immediately underwrite the customer, in half an hour I can approve a tractor loan. So that is digital. So it various different products. And then another overlay on top of it is whether the customer is ETB customer or an NTB customer, or a KTB customer, for instance, like if somebody is coming from Flipkart in Bharat markets. So I can use that data also to underwrite a customer. So it's a balance or some kind of equilibrium that you draw, but it depends upon what product are you underwriting. If it is a secured product, we're taking an asset, you have to underwrite that asset, etc. Some processes can be digital, but in the end, somebody has to go and take a look at the property to do a valuation, or somebody has to do that process. So it varies across segment. I hope that answers.
Yes.
Yeah.
Next, anybody? Ajay, yeah, go Karthik, yeah.
Hi, Manish. Want to understand two things on Bharat banking. One is the opportunity, right? What we understand is while Bharat banking would be 60% of your branch network,
43.4.
let's call 50. It could be probably 15-16% of the overall business. And what I'm keen to hear is if you are the second or the third or the fourth branch in let's say tier 4 or tier 5 centers, how would your business drop relative to the market leaders in those locations? That is one. And second,
Business drop?
from a catchment perspective, if you entered a market, let's say if you're the second or the
How
third.
will we capture more?
Yes.
Okay.
And the second thing is from a brand acceptance perspective, as you get more and more interior, are the larger private banks now becoming more acceptable for liabilities business?
So I'll answer the second one first. Okay. So larger private banks getting more acceptability for deposits. Definitely true. We saw the market share increasing for deposits for private banks in these markets and growing at a possibly faster clip than the rest of the industry. So acceptability, given the brand that we have, given the reach that we have, etc. Acceptability per se, I don't see an issue. Okay. How many customers are you able to win is something that you need to fight for, and something you need to give right solutions for to win the customer. But acceptability, मेरे को इधर कुछ करना नहीं है, does not really exist. मुझे Axis Bank, I don't want to put money with them. I think that's with every passing month, quarter, year, that is kind of fading away. I mean, because we are digital and there are a lot of customer confidence that we build.
And the context for the first question, just to
I'm
just
coming to
that
the
you
first
get
question.
yeah, you have an SBI almost present everywhere, and there's always a regional bank or a regional PSU bank which will be there along with SBI, and then the PSU private banks have started to get into these places. So does the catchment offer even enough opportunity for a third or a fourth or a fifth large bank to grow?
Of course. I'll answer that. See, if I take you to the core of the entire thing, what is it? Why would a customer come to you? Compared to the rest of the market ecosystem, right? So, and it comes down to actually the speed of delivery, okay, the simplicity of your process, etc., and the kind of product that you offer, and the local level relationship that you manage. So what we are trying to do in these markets, we are trying to, and I've not covered that in my presentation, it's something which we're trying to do is to build even around a branch that we have there, is to build an ecosystem around that branch. So the branch is just not a normal kind of a branch where we can bring a lot of other stuff to play to attract customers for advisory and for other things. But that's the next level of evolution for us. But if you deliver with speed to customers, if you For the sake of example, let's say if there's a gold loan. If there's a gold loan, there's a people who are writing gold loan at this percentage of rate. There are people who are writing gold loan at this percent rate. But these guys are still doing business. Why? Because they deliver at speed. Right? They do not ask you to go through cumbersome processes. It doesn't take 3 days, and somebody delivers with speed. So I think speed of delivery is one item. Products and coverage is second item. So what we are trying to do is we are saying that while we build the digital and the tech spine running across these businesses, we're also saying that that what we have today, is that good enough to kind of do more from my existing branches? And we see a significant headroom within that customer segment even today for all the product sets of the bank. And I don't think I don't think with the way it's growing, I don't think being my third or fourth player in a market is a limiting factor for my growth when I have a 4%, 5% market share. Of course, do you do it rightly, risk has to be calibrated, etc., but I don't, and then of course it comes down to where do you open your branches, which markets are growing, whether you are scientific enough about that or not. There's some of those stuff that come into. I hope that answers.
Go ahead, Rakesh.
The RBI gives a higher weight on the PSL if you are lending in those areas. So what kind of branch expansion? I know that for the banking sector, that kind of a branch expansion pace is quite low. So what is our view and what is our plan in those areas?
So I did that analysis. We do that analysis very frequently on those districts where you get a higher weightage of the priority sector contribution, right, which is the underbanked, under credit districts, etc. And we have a significant presence in almost all of those districts. Okay, it comes down to what kind of products you are delivering, wanting to deliver in these markets, right? So we see that our microfinance delivery in these markets is good. We see microfinance as an opportunity to scale up that business in these markets. So when we are opening branches, we have a requirement to open some here, some there, etc. We try to see if there's an opportunity and taking a few factors into consideration, which is the likely growth in that area, PIN code, presence of competition, the assets or liabilities in that district, etc., etc. And for instance, in Anantapur district in Andhra or Telangana, where in border of Andhra, Karnataka. So if you're going and doing microfinance in Anantapur district, it works and it's profitable business and you can continue to scale it up. But we keep this in mind when we go to a particular district, that whether for the same effort and without taking too much risk, can I provide a leverage to the private sector? Yes, we do consider that. But building something only around that is something that we're not doing, because we have to look at it from the opportunity that those markets present.
And even I think the asset quality, the fundamental will also come into play while you are lending in those districts.
It does. So that's why different strokes for different folks. So those markets are different. Some products can work there. A gold loan is a good starting point, and gold loan risk is limited. There's a fraud risk, of course, or a transaction or operational risk, but somebody giving you gold and doing a small ticket loan, etc., is something that you start with the product to onboard clients in these markets. So there are opportunities. But it's a district is a big thing, but within a district there are centers which are here and there are centers which are here. So you choose where do you want to just go and plant your flag. So, but we consider it, of course.
Do we have any more questions? Yeah, Nitin, go ahead.
A couple of questions on MSME financing here. We have been reporting pretty strong growth, around 28%, and this number is likely to maintain a very healthy traction. But some banks at times have indicated some pockets of stress emerging in the MSME space. So how has been our rejection rates over the last couple of years in this business?
Rejection rates?
Yeah.
Okay, they've largely been flat because you make those kind of choices up early in the way of you building the pipeline. So if there are going to be some segments or sectors that one wants to stay away from, or certain markets, etc., then typically when those cases are being sourced, they don't really come in. That lead doesn't fructify into an application. So we don't see any spike in rejection rates. It is a given fact that there is volatility in MSME risk, and you have to be careful about it. And that volatility is a reflection of the income volatility. So the way you do an assessment is what matters. I hope I'm answering the
Yeah,
question.
sure. And there was an interesting slide that you showed wherein you showed like how much is the ticket size and what has been the growth across ticket sizes. So is there any sweet spot that you are chasing for in terms of growth in MSME?
No, I think again, if you look at the segments which are there, the micro, the medium, the small, I think there is growth across them all. Micro is of course the biggest segment in terms of numbers, and the comparison between sort of medium and micro is fairly large. There are only about 40,000 registered medium enterprises, but they are very valuable. On the micro side, you will have a lot more customers. Many of them can be underwritten, some of them can't be underwritten. So I think it's more to do with the slide which I showed, where one is a segmented approach across those things, and also the kind of products that you want to go to them with. You want to go with more simpler, lower risk products for the entry segments, and more involved products for the higher segments. But there is no part of that segment where one would say that this is to deprioritize or this is at a higher priority.
And lastly, one more, like, what will be the mix of, say, refinancing versus the new account sourcing? Because what we understand was like it's mainly refinancing that happens in this space.
So there is a large component of, I think what you say, refinancing is a takeover from one bank to the other. But most of those takeovers also come with enhancements. Very rarely will somebody just say that, okay, I've got a 10 crore facility with some bank and I'm just shifting exact 10 to, that may happen sometimes. But a lot of time that happens because from the 10 they want to go to 12, or from the 3 they want to go to 4 or 5, right? And they want to then add one more facility. They want to get some additional lines for guarantees or for LCs, get some export credit involved in that. So exact number I'm afraid I don't have, but that portion of let's say call it a plain vanilla takeover, right? Which is like a round robin moving from one bank to another. That is not a very significant part.